Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, October 2, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, you see a red line across the screen. That's our 565.17. It certainly looks like the daily candle hit that line and ricocheted off of it. Lo and behold, they did come up pennies short. And what do I always say? The low of the day was 565.27. What I always say is sometimes they come up short, other times they spike them through, but we're not going to split hairs over pennies. The idea from a larger picture perspective is they came down to run a test of that area we've had our eye on for several days. 565.17 is in fact the gateway into no man's land between that and the gap is officially at 561.40. It's a big space. It also, in a sense, coincides with the daily chart 20-period moving average. So there's a lot of stuff going on down there. This was the gateway. They ran a test of the gateway today, and they had a nice rally away from the gateway. Just to get the visual of what happened this morning, you can see they came close. Traders in the live room, inside the numbers, they knew the number. Whether you as an individual trader, chose to front run the number, again, sometimes they come up short, other times they spike them through. We have traders that front run everything, and we have traders that wait for a spike of everything. We have everything in between. Some traders picked it up ahead of time and were rewarded handsomely with what we call in the trading parlance a rip-roaring rocket ride away from that place. We knew about that place. So what do we do with this information now? Well, it's pretty simple from here. We use 565.17 as the bogey. What does the bogey mean? Below, she's bearish and she's going to come down and at least make an attempt to fill the gap, maybe go lower, maybe come up short, but in a sense, 565.17 is our bogey. Staying above, and this is just a pullback in the larger uptrend, and above all the moving averages, the trend is your friend. We're using 565.17 as a pivot, if you will. Of note, by the way, we have a lunar event taking place. The annual solar eclipse is today, October 2. If you would like, you can go to NASA's website or space.com and read all about this stuff until you're blue in the face. With these events, we know markets can trade up into them or down into them. Did the market just trade down into this event? That is certainly a possibility. All in all, is this really down? Well, it's a little down, but it's not really down. This is more down. But this is just a little pullback for a couple of days. I would say we have an open question on that one. We have two things on the board right now that are exacerbated. We have the Middle East stuff going on. Iran, Israel, all that stuff. Hezbollah, Hamas, Houthi and the Blowfish, all that stuff's going on. It certainly is escalating. We also have the East Coast of the United States. Port closures, the longshoremen strike. Nothing happens yet, meaning that takes a while to take hold. But when and if that does take hold, like if they don't resolve it in, let's just say, 10 days or less, all of a sudden, people are going to start saying, hey, where's my stuff? Guess what a supply chain disruption is? Inflationary. Supply goes down. Demand stays the same money chasing less supplies, prices rise. That's economics 101. In the books, they use the term goods. I'll go out on a limb right here. You might want to write this down, put it on a sticky note and say, hey, if you see the 20-period moving average this week, it's a buying opportunity. whether they spike it by a little bit, come up short, touch it on the nose, anywhere in that general vicinity, we'll say even down to 560, I think that's a buying opportunity for a bounce back in the other direction. You have something else looming. We're the umpire calling balls and strikes. It's Rosh Hashanah. Do you know the adage, sell Rosh Hashanah, buy Yom Kippur? I didn't make that up. I don't have the patent on it, but you can do the homework and see how often that kind of strategy might pay off. What about inside the numbers, the live room? You kind of already know the story. Some traders bought the low. Some traders were left at the altar waiting for either 565.17 or a spike of it. We know about the number. It's been plastered here for days. We certainly had both directions posted up on the board. We had the flip around situation where if Mrs. Market recaptures the flat line at 568.70 on candle closes, door opens for a leg higher, 570 and a quarter, and so on. However, we did have a number in between. And I just want to point something out real quick before we zero in on a couple of other things. Look at all these numbers. This is 8:40 in the morning. We're putting everything up on the board. You got your 565.17. What happens? What do they need to do to get there? They need to bust through 566. Our pivot is 567.10. There's a 5-minute chart. You could see our pivot. You could see them stall out at the pivot on the way back up. And by the way, right of the vertical is today's activity. Pause the video, read the notes, go back to the chart to double check the work. It's all in here. Once they hit the zone down there around 565 and change, we were basically managing the ride back up for those that were long. Once they fill the gap, we had the next place of overhead resistance, 569.25, then 570 and a quarter. They never got to 570 and a quarter, but they did get to 569.25 and a bit higher as well. Pause them, read them, go back to the chart to double check them. It's all in here, everything you need to trade in the S&P during the trading day. Doesn't matter whether you're trading futures, options, exchange traded products, options on futures. Doesn't make any difference using an abacus. I don't care. Here are the numbers that you need. We had 3 potential stocks on the move today. We had Nike, ConAgra, and HOG, which is Harley Davidson. Harley was off the board. It didn't hit its entry target. However, ConAgra jumped everything. It opened below the 3rd number. We'll take a look at the chart anyway, and then we'll take a look at the chart of Nike, which was a wiener. Here's ConAgra, and the last number on the board was 30.36, and you can see here they opened below 30.36. So this one was off the board. They came back to test it, but that's it. It was off the board. Opening below, we don't want it. We move on. About Nike, 82.21, came right into it, bounced off of it, gave us the trade. A lot of participation in the live room today in Nike. You just got to put this in perspective. Stock closed yesterday at $89.13. It's opening up down roughly around 7 or 7.5%, whatever it was at the time, and you're picking off the low almost to the penny. How do you do that? Very carefully. It's not easy. There's value in information like that. How to do that. I want to jump back for a second, use the spider here as an example for a little bit of a chart lesson using the hourly chart. So I want to point out a couple of things that happened and a couple of things that are in development. We'll see how it works out. So this is what I call a pattern inside of a pattern. What does that mean? Well, let's take the first one, for example. You have this down move here, this big time breakdown candle right there. And all of a sudden, you could say, well, inside that down move, I really have some kind of a bearish, flaggish situation going on. It's not perfect, but the concept is there. You could see them eating time off the clock after that big down move. Okay, fair enough. That's right out of the textbooks. It looks like a bear flag, smells like a bear flag, all that stuff. It's not really a flag. It's a little sloppy to be a flag, but it's the concept. We don't have to be perfect. We're not in search of perfect. We're in search of a concept that we can hang our hat on to learn from. But inside of that bearish, flaggish situation, we have a similar situation in the other direction. We have a bullish, flaggish, pullback-ish situation. So we have an up move here in this green candle, and we're eating time off the clock. It's not really a flag. It's just a pullback inside of this big-time breakup candle. This is a breakdown candle. This is a breakup candle. What did they do? They tested the low of the breakup candle, ricocheted off the area where the red line is from before, 565.17. They came up a dime short. And here they're eating time off the clock inside of this breakup candle, building energy for what? A move higher. To do what? Yeah, to test the high vicinity, the neighborhood of what? Of the breakdown candle. This is the way the market works the large majority of the time. Re-listen, re-watch this lesson. Get out your sticky notes because you'll see this kind of thing over and over again. Most people just aren't looking for stuff like this. What's going on over in Camp IWM? Well, from a daily chart perspective, they're hovering on the 20-period moving average. Okay, fair enough. We've got a pullback into the 20-period moving average in the midst of a larger picture uptrend. Now, as an umpire calling balls and strikes, it's fair to say, hey, wait a minute. Yeah, there's a larger uptrend, but they may have put in a lower high. That's certainly possible. You have to be aware of that. It is a puzzle piece. It's on the table. Yes, both things can be true. The larger uptrend and a lower high. Both things currently are true. So should we leave it on the daily chart as not much happened today? The IWM was down 30 cents and they're hovering on the 20-period moving average. Sure, well, maybe not. We have a similar situation to the spider. We have a pattern inside of a pattern. What's going to win out? Is it going to be the bearish, flaggish situation? Or is it going to be the secondary or pattern inside the pattern? And we're going to look at this up move from the breakup candle, the test of the low, the eating time off the clock, building energy to make a move higher into, in this case, these moving averages near the vicinity / neighborhood of the breakdown candle high. You see how this all comes together? You have to be an umpire calling balls and strikes. What about the folks down at the transportation department getting whacked today for about 131 points? Whacked is a technical term. What you have to say here, at least I have to say, is they did run a test. They spiked it of the breakdown candle high, but what they didn't do is close any day above it. And here they are getting rejected from it. The moving averages are going to be important. And guess what? So is this trend line one more time. Same routine. This trend line's important. You have a gap over here. The gap coincides with the 20-period moving average. You get below the gap, you're going to visit the trend line and the 50-period moving average. That's the transport complex. How much of the components of the transports will be impacted by the port closures and the longshoreman strike? These go hand in hand. It's like two peas in a pod. For now, the bull case is they're above all the moving averages. Trend is your friend. Start coming into the trend line. Trend, questionable. Trend turns neutral inside the trend line. You're back inside the triangle. Get a better view of it, and here you are. They've been trying like the dickens to break out of the top end of that trend line. There you go, another technical term. Dickens. What's going on with the Q people? Up 68 cents today. We're not going to make too much out of that. We're not going to make a federal case out of that. They're above all the moving averages. Trend is your friend. You have a pullback from the highs. You have an open gap down here. You got trend lines down here. You have a similar situation that the spiders have. 468.65. If you see that somehow this week, buy it with both hands. What about the XLF, the financial complex? They're running shotgun right around the 20-period moving average. As long as they stay above, she's bullish. Start dripping below. You got 44.30 comes into play. F below 44.30 and the 50-period moving average represented here by the blue trend line. That's trouble in paradise. But for now, above all the moving averages, and specifically the 20-period moving average where they are, and the trend is in fact your friend, and there's nothing wrong with that particular market. Look at the weekly chart, firmly in an uptrend. Nothing wrong with this tape. Smash mouth semiconductor space couldn't even get into the convergence of those moving averages, bounced it anyway today. Did not make a new low from yesterday. They have relative strength up 1.44%. What we say about relative strength, might want to bust out your sticky notes and write this down. Relative strength is when you have something that is positive, for example, on a day when the market is negative. Now, the spiders were up 24 cents today. All told, the SMH still had relative strength. So it was up a whole lot more than the spiders, 1.44% against flat-ish. That is, by definition, relative strength. Well, when you have something that has relative strength on a day when the market's flat or down, for example, what do you think happens on a day when the market's up? That same vehicle will traditionally outperform on the upside, drawing energy from when it had regular or relative strength. It was being accumulated, which is why it had relative strength when everything else was being sold in the market. Money flow was going into an area that was flowing out of another area, getting ready for what we call in the technical and trading parlance, the blast off. That's what happens. That's why you want to keep your eye on things that have relative strength. When the market is struggling, what has relative strength? Write that down. Put it on a sticky note. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.